Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Anjee Solanki, National Director of Retail US at Nasdaq-listed Colliers, to discuss how retailers are approaching expansion and testing new formats in response to changing consumer demand and competition. Anjee, it's great to see you. Welcome to Trade Talks.
Thank you for having me again.
You got it. And let's talk about some of these trends. Have you seen an increase or decrease in store spending?
Oh, definitely an increase. We've seen an increase. If we look at consumer confidence, it was up again in July. And so there definitely still is a demand to go out and shop, eat, enjoy, socialize. So it's definitely a time to spend. And we're seeing that with all income levels.
What is the most mentioned reason for expansion?
In terms of retailers are expanding right now, I think the most important reason is that they're looking at geographical reach. And so as we've seen a lot of change in terms of in-migration, out-migration, but also just population increase in general, the geographical reach is so much more important. So they're really looking at their, the number of stores, their portfolio of locations, etc. But they're taking that into account from a geographical basis as well as store formats. So size is still quite important in terms of how large or how small they go.
I thought it was interesting that 1/3 of customers don't trust retailers who don't have an online presence.
It is really interesting. And I think that has to do with one, you don't have someone you're speaking to. So you're actually, not talking to anybody about the product itself. So you're reading reviews, you're reading customer reviews, but having the ability to walk into a store, touch, feel, have, someone explain the item to you is so critical in that entire customer journey. And so I think that it's important that customers really have the option of buying either online or going into a store, but the store is just not going to go away at all.
And most retailers want to test new formats responding to changes in consumer demand and competition. What types of formats are they testing?
So we're seeing a really interesting variety of both small shop space, so going downsize, but also we're seeing certain smaller footprint type brands or stores or retailers, I should say, expand into much larger. So for example, we're starting to see Foot Locker. Typically you don't see them, above, 4,000 to 5,000 square feet. They're actually looking at 30,000 square foot stores. And it's not going to be in every market, but in certain markets. So having that flexibility, I think, is really critical. And I think it's really based on the availability of commercial real estate.
I think it's interesting as well. I was shopping in White House Black Market in Athleta over the weekend, and they advertised for pants, regular size, long, and petite. Being only 5'1", I need to get petite. They only sell it online. I'm wondering if that's a better way for them to control inventory versus having 3 different types of verticals across one pair of pants. Are you noticing any of those trends where they're using more for inventory control, having that online presence?
100%. I think, what we have to stop and remember is that, there is such a diverse group of individuals and consumers that are out there, but having every SKU in your store can be a cost, meaning that in a certain market, you may have a very low demand for certain items or certain products. And so understanding the customer within the marketplace and the trade area and how many people that are actually coming into the store, how they're shopping and their behaviors is critical, because it actually can reduce operational cost and improve on margins, I should say.
What are you seeing with investors and developers in terms of trying to attract consumers back to their spaces pre-pandemic?
It's really interesting. I'm actually at a project, one of our projects today, and we really take pride in how you have that experience from the curb in, meaning that it should not be you're driving into a parking lot and you get out of your car and you're walking into a shopping center or a project that's well merchandised to have either, an opportunity, or not an opportunity to really enjoy the exterior of the project. So investors are putting in capital to improve upon soft seating, hardscape, softscape, lighting, music, really touching all the different senses. So even though you're there to shop or to enjoy a restaurant, it's important to also have that experience the minute you step onto a property.
What are you seeing in terms of leasing activity? Like I said, I was in the mall last weekend. It felt like 25 to 30% of the stores were empty.
Yeah, it's really interesting in certain markets where you have, there's definitely a difference between, outdoor centers, malls, etc. It's really how it's positioned in the marketplace. What we've seen actually as these retailers are expanding, some are also relocating because there's a new project that outpositions another. And so it's important for investors to really look at, okay, leasing activities definitely picked up in the majority of the markets that we've seen. We've struggled in certain markets on the West Coast, but that's slowly recovering and coming back. But at the end of the day, it is all about where the consumer wants to have a variety of different stores, and those stores being what I would call not the stores from yesterday, but or 10 years ago, but what is the next generation of retail, the next generation of stores? They want to have that novelty, that newness, that excitement. And so as you start to see new centers pop up and they have a stronger merchandising mix, you're going to see consumers moving to those centers and abandoning potentially others.
Yeah, it certainly has changed even since pre-pandemic, a much better experience for sure. Anjee, appreciate your insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.